Hi, everybody. This is our Thursday show. And the name of the show is called Bitcoin Live, also called the Marcus Show, because everybody's asking for Marcus.
All right.
Even last week, when Marcus is coming to the show,
All right.
is his show too.
All
He's
right.
here all the time. He's not a guest. This is our team.
All right.
Uh,
Awesome.
So, and the goal is to discuss, the latest things that are happening in Bitcoin using the different power law indicators that I develop. You can see below where you can actually get the indicators. You can go to that webpage if you're interested. That gives you also access to our Discord community. We have about 1,000 people there. We do analysis of the price, different lectures, introduction lecture about the power law. So, but let's jump in and let's go directly to the chart. Share screen. All right. So I'm going to share this particular chart. This is one of the many ways. In fact, actually, you are seeing here three different indicators superimposed on each other. You see the general power law. I explained many times. Unfortunately, there is no a simple way of showing the log graph. It's more natural for humans to see time linearly. So, it's okay. In a K chart, it's just the straight line of a power law is not completely clear. It's straight here because if you look at a short time, it will still look like a straight line. But if you look at over long period of time, of course, it's curved, right? So if I zoom out, you can see that it starts to be curved. It's only a straight line if I take also the log of time. But all the calculations are based on the power law. So the central line, to clarify, is let's say, kind of an average, right, between the large deviation of the peaks and the support line that is indicated here by this black line. Now, what is the blue curve, the darker, let's call it purple line. The purple line is what I call the full model. And I explained it several times what it's supposed to do, but I need to explain it a little bit better. And what that does, it's trying to, having one single graph, all the different information that we discover about the power law. For example, the support line. So you see, it's not easy in one single equation because one of the things that needs to be explained that actually everything is an equation here. It's it's not based on um, me trying to fit the data as it comes. It's just one single equation that is calculated ahead. That is one of the things that distinguish it from what is called TA, where they try to fit the data manually many times. This is all mathematics.
I
So
think your mic's out, Giovanni.
my mic
It
is out.
sounds very distant. Your audio's not the best. Yeah.
What about now?
Ah, fantastic. Much
Okay,
better. Yeah.
not better.
Probably should
So
do it too.
yes, and so the full model tries to include the oscillations, right? We see these bubbles, and they are oscillation because we're really very, at least up until now, we have been very consistent in time, basically every 4 years. So this is what we are trying to reproduce with these bubbles. Every 4 years there are these oscillations, and so we kind of almost bookmark them, right? So we are not trying to get the exact time, but kind of a region where the bubble seems to happen, right? Part of this is this interpretation that, for example, this bubble here was double the other two peaks, and the real bubble happened here and not here. This was kind of almost like it happened. It happened before time. It was a false alarm. It was it went pretty high. but the second bubble is what really seemed more in line with everything else. Now, this bottom part of the graph, it tries, not perfectly, but it tries to also include the bottom, right? It should be as close as possible to the bottom. Like I say, it's difficult to keep in one single model all these components. So it doesn't do a perfect job. The real bottom is really the black line, but it's supposed to contain this oscillatory movement where we go above the blue line, this light blue line, and then we go below the blue line. So basically there are two regions, right? This is what is indicated in red here. There are this region, we call it the turbulent flow, and then there is the core power law, that is when we are below the blue line. And we usually stay there pretty consistently. There have been few violations like here and here, but usually, we cross it or we touch the blue line, and then there is a strong correction. Now, I think one of the interpretation of what happened in these cycles, we have mentioned this before, is that the ETF push the price too fast, too quickly, up, and we arrive above the power law. Then we had a correction to bring us down, like it happened here, because it doesn't want to be there. It wants to stay. Since the Bitcoin was to stay close to the core power law during these 2 years, it's actually very interesting because these last 2 years, and then when we are above the power law, is also a 2-year period. But the correction, differently from what happened with the last cycle, we had basically a reset. This event here is COVID. You see how strong of a correction it was, almost vertical. And then Bitcoin recovered very quickly, more quickly than stocks and gold. But notice what happened. We reached there, we kind of wicked down, like basically this was kind of a wall, right? Very powerful support line. Even here, you see, in the past, the support line was barely violated ever. And then we bounced back, and we had a very strong bull market. This time, we didn't average that. We had a little bit of a correction, and then we went up. We arrived to the time when we are supposed to leave a power law, and we stay there, and then we had another correction. Maybe because all the momentum, all the compression, that we needed resetting, it didn't happen. So that is a possible interpretation. What is interesting, though, is that if you look at, try to magnify these, if you look at since basically when this happened. So if I start from here, since kind of the beginning of April, we follow again this path that I indicated here, that is the full model, right? How we're supposed to go higher and higher and reach the peak. The peak is supposed to happen at the end of the year. If we follow previous patterns, it should be at around 200K. We did it many different ways with Steven. He did this calculation at least 3 different ways, and we always converge to these numbers. These under the assumption that the patterns that we have seen before in the cycles continue. So there are many people that are claiming, oh, we don't have a cycle anymore. They are trying to dismiss it. And I will say it's too early to say that, right? Actually, we are on a path that is consistent with my full model. And so we are thinking that, and this has not broken, and has been consistent at least since April, and we are continuing to move in that direction. So we will see if this continues to apply. I made some projections, for the next 3 months, 6 months. It depends where we are right now. We are close to this 70% quantile in this model that divides all the different deviations in quantiles. And so if we go 3 months from now, we are supposed to be around 115. 6 months, so this when will be close, to the time we are expecting a peak, anything between 6 and 9 months from now. But usually when we have, like you can see, the peaks are not 0.7%, 0.7 quantile or 70% quantile. They are more close to the 90 quantile. I don't. I think because of the diminishing returns, we are not going all the way to 95 quantile. These, in addition to the quantile, I'm also showing this decay channel that shows the exponential decay of the peaks, and you can see at most we are close, to in this range, anything between 200 to maybe 220 max. It will be very unlikely to see these 95 quantiles, like above, let's say, 230 or even 250. So this is the weather report so far using the power law. We can see other indicators, but I think these gives us enough information. Okay, so this is my component of a analysis. I leave a grant to Marcos that will talk about liquidity.
Okay.
Yeah, the conversation with Stephen yesterday was great, Gio, talking about the quantiles and the standard deviations that we can reach and where it probably won't go. I think it's very helpful for people that are looking to make decisions at the top of the cycle. Definitely a lot of this work is going to be very valuable for people at that moment. And I think they probably should start thinking about decisions to be made then.
Yes. Okay. Can you? What we're looking at right now is a Bitcoin daily chart, and we are looking at the Bybit perpetual futures. We always like to start with futures because they are a price discovery engine. The price is discovered there. I hear Giovanni, somebody's getting some feedback there on some typing or something. All right. So we use the Bitcoin futures as a price discovery engine. So right here, what's very interesting from the last week, we've been building on this correlation between Bitcoin's price. It was a little bit delayed from the power law. And Giovanni was just stating that around April 1st, 1st of April was right here when Bitcoin determined that it was late for the party and it decided to get on track in a hurry. So right here, it made a very strong move to catch up to the power law. So right now, with this move that we've had for the last 37 days, it's been almost straight up, and it's gotten right back on track with the power law. So let's add in the liquidity and see what is causing this move here. There's liquidity here. There's liquidity built into these zones. So let's take a look. And there it is, the engine behind the engine. Yeah, right here. So we'll back out some of the light stuff and we can just look at the concentrated composite liquidity. So as we can see, we've been building up a tremendous amount of liquidity. When we broke out of the previous zone in November and we got in this range, we started a brand new liquidity event. We began to build up liquidity, and liquidity is used synonymously with open interest. For you purists out there, liquidity is actually the event where it is liquidated and the ease of price movement, but it's actually specifically open interest. But we'll use the word liquidity, sounds better. So here on this side, this is the short side liquidity, and this is the long side liquidity. And what happens is, and the market is fractal, it works at all different time frames. So when we enter into a new zone, the market will consolidate all the algorithms, thousands and thousands of algorithms working simultaneously creates this phenomenon, and then the liquidity will start to build. So price moves off liquidity and liquidity attracts price. So they're one and the same. And over time, as this cycle continues, the liquidity gets bigger and bigger on each side until it's ready to be harvested. So we started the downtrend. That was in actually right around mid-February. We made a big liquidation event there. middle of February, and then we completed. We kind of bottomed out around the point where we needed to get back on track with the power law, the 1st of April, and we stopped liquidating the short side, and we have reversed course, and we're beginning to liquidate the long side. As you can see here, these impulses, and we're liquidating the longs. And we have currently, everybody wants to know, okay, where is it going to go next? Well, your eye should be drawn to this extremely large amount of composite liquidity here. This is a combination of 25x, 10x, 5x, and there's actually 3x in here. I'll go ahead and highlight that. So there's a ton of liquidity up here, and the price is drawn to liquidity like a magnet. So at some point we're going to liquidate this, but in the near term, let's take a look at I'm going to back out to the 25x. The highest liquidity is what's taken first. So 25x is going to be liquidated before 10, and 10 before 5, and 5 before 3. So the market likes to go in phases. So as you can see, there was a level of 25x here, a level here, and a level here. And then simultaneously, as it liquidates these levels, it builds levels to come back. So right now, we've already terminated the first level of 25x and the second, and there's one remaining 25x left. And it looks like, in my opinion, it'd be a high probability that we take this next level of 25x, and that takes us to 110. And maybe at this point, we might expect some type of small correction here, because we haven't had anything. You can probably notice the market has gone straight up without any reversals or pullbacks or retracements, nothing significant. So at some point we're going to do that, and the most probable place to do that is after we take out this last level of 25x, and then we should be looking for a pullback before we continue on. Because what typically will not happen is you cannot reasonably expect to liquidate this entire area here, this entire liquidity pool in one impulse. The market doesn't take it at once. So we'll come up here, take out the 25x, reposition, and then slowly work our way up. So to keep it kind of short, that's kind of the high level. I can get into more specifics, but that's how it's looking right now. Probably coming to this area here, and then terminating. When we're talking about the entire pool, we're looking at about 140K. And then just to get an idea of how far it can go past the pool, when we liquidated the last event in 2024 of November, we went up an additional 20%. So when we liquidate this pool,
that gets us to
right,
20 plus 10, another 30, 40, 50, 60, maybe potentially 170, 180.
Exactly. So let me draw it in. We gotta keep up with Giovanni's power law here. So when the market terminates this area here, then we go 20%. So here's the top of the liquidity. This is what's here. This is what's in the market. So we can calculate that. And then we'll go up an additional 20%. So we're already here. That's at 163.
Wow.
So we'll draw that line in here, 163. So that might be our new top. So we'll come here, and here's what gets interesting. Once we come up here, we'll have to form new liquidity pools, right? So there'll be a new pool starting to grow up here, and the process starts all over again. So that secondary, that next pool can take us to 180, 190, 200. That's how we get there. As the market consolidates, it grows the pools bigger. So we'll be building this long pool. So that's how we get there. And that is just from my Etch-a-Sketch here. We're looking at that's on schedule. That's around what the power law stands in November, December, October.
And then what happens at the top of the cycle? Does that mean that the market just pulls back, reverses before there's time to build up any kind of significant liquidity?
Well, here's what's interesting. At some point, it won't just keep continuing to leg up. You're going to wick in here, and then we might just start coming
Just
down.
come back
Yeah,
down. Yeah.
for a while. Yeah, we're not just going to keep making new levels and taking them. At some point, it will exhaust.
Yeah.
Yeah.
Interesting that this is lining up with the projections and your indicators as well, Gio, isn't it?
Especially right here. This is amazing right here. This part here. I mean, everybody
Yeah.
was.
It's almost like, I know.
Yeah, I
Yeah.
mean, that's crazy
Wow.
because
Is there a way of
look at.
can you have the indicators, right? Can you maybe next time, I don't know if we are prepared, we should maybe test it
Mhm.
to project the indicate the to show also the power law indicators on top of this chart, right? This is it's a trading view chart, right? So
Yeah,
in
we
theory, you
we
could,
could probably look at doing that. Yeah,
yeah,
but it
we
is
can test it next time. Yeah,
amazing how violently it went up to get back on track with the time. This is no pullback. This is just basically straight up.
yeah,
That's crazy. Yeah.
and we mentioned, right? I say that since April, the power laws price started to follow the full model. This is when I say, oh, it's from the beginning of April. I didn't see your chart, and you say,
Yeah.
well, that is exactly when it happened. When this new movement happened, and that also converges with the global liquidity, because if we look at the global liquidity, we see an increase in global liquidity, and this entire year there is a shift of 85 days between global liquidity and the price. So everything seems to converge. That is really nice.
Yep. All right. I'll turn it over to the
Yeah, in
next.
fact, maybe I can show for a second that
Yeah.
global liquidity chart, and then I can. So this is the chart. Yeah, so this is the chart I was mentioning. So this is a model. It's also another of our indicators where you see the purple line. The purple line, many people show the M2 directly. And so, I was now the first person to see this shift. I didn't see it. when I am first on something, I mention it. And when I'm not, I also mention it. I don't know who was it, maybe Raul Paul that was insisting on this. And what I did, I went back and I tried to use all kinds of statistical tools to verify if what he was describing from a qualitative point of view, because I never saw him do any real calculation, was actually based on real math. Because people tend to see patterns, right, where patterns are not there. And basically it's like seeing Jesus on a tortilla. Is this real, is not real? So, and it turns out it is. In fact, it turns out 70% of the time that M2 goes up, the price also goes up 70% of the time. And these are, for daily moves. Now, it's more consistent when you look long period of times, and less when we go down, about something like 56% of the time, 60% of the time. So there is a strong correlation between the two. It's a question of, how closely every little twist and turn corresponds between the two. But it would be ridiculous to claim that they really do. And there are some analysts that they go to that level, saying, "Oh, look, it's going down." So in the next, no, you have to take it as a general trend. But here you see that we are following this liquidity run up, of the now it's kind of liquidity is kind of start to flatten out a little bit, right? This is the purple line, and the purple line, just to explain, is not liquidity per se. It's a model of a price based on liquidity. So it's slightly different from what everybody else show. And this relationship is a power law. So if you look at the last 10 years of data, it looks like there is a power law between, it's a weak power law because there's an extent over the entire history of Bitcoin. One should take it, with a grain of salt, but it gives us the opportunity to make a model, to predict how much we're going up. And again, if you look at the extension, let's say we go all the way to the end of this run up, where it seems like liquidity starts to kind of flatten a little bit. We get close to 130. And what were you getting before, Marcos, when you were talking about the next level of
130.
resistance?
Exactly
About
130.
About 130,
Yeah.
140, yeah.
Yeah. So again, it seems it's nice to see convergence of different indicators saying basically the same thing. So it's interesting. Yeah, this is another view. The picture below shows, the winning rate. The yellow is the M2 model. The blue is the price. And you can see, whenever you see a rundown of a M2, the price follows and same thing. And remember, the orange is kind of a leading indicator because it's 85 days ahead of time. So it's another tool to look at, to tell us where we are going. So we still have, several weeks, if not months, of upward movement. Very big corrections, but we are supposed to go up most of the time. Okay. Costa, do you want to talk about our bot and maybe give a little introduction for the people that maybe are new to the show? And maybe share,
Yeah, let me bring up. So our trading system basically is. Actually, Sebastian, you can give it a bit of an intro. You haven't been here last one. Do you want to give it a bit of an intro today?
Yeah, sure. So for anyone new listening in on the show, welcome. And yeah, we're going to just do a quick little demonstration of the algorithm here and what it's designed to do. Now, inherently, of course, when we tune our algorithms, it's always with the power law in mind. So the hard bottom that Giovanni was showing at the start of the show really ties the whole system together. And when I say tie it together, I talk intrinsically about understanding risk management and where your levels need to be within your trading. So our algorithm does have this hardwired into it based on the risk management that we take and how it's going to trade. Now, obviously, as you can see here, we've got an upwards trending market. Now, to be clear, the algorithm is actually really designed for downward structure and bear markets, but clearly, as you can see on the screen, it trades upwards price action very, very well also. Now, the reason we put the focus on downside trading is that, of course, usually when price is trending up, this is the price action that a lot of people can have success in, but of course, it's when the market dips is when, everyone gets eaten alive. But just from a high level over what the algorithm is actually doing here, if you can see the screen, what you're noticing is entries and hard exits. Now, the algorithm has been built on a multitude of different technical indicators and also maths to give us a really strong entry. And as you can see on the chart, the algorithm is not perfect, but what we've designed is something that has very, very powerful entries and also a very, very powerful understanding of where to get out of the market, which I would argue is probably the single-handed most important thing, right? And Giovanni's mentioned this previously on other shows we've done together. He's run a lot of algorithms and there's a lot of algorithms in the market, but the key really above everything else is the risk management, but also the execution. It's very, very important. So just seeing here what the algorithm is doing, we're never layering a lot of our money into the market at once, right? We're simply using small amounts of the capital to slowly dollar cost average in over time and pick up these local bottoms. And this is really, really important. Now, another thing Costa's showing you here in terms of a feature, as you can see, we did pick up the local bottoms for an entry, but since in this example, we're using a trailing take profit, you can also have a look at how we're able to capture upside in upwards movements as well, because this is very important. And as you can see, that whole leg up there, if you take a look at where we entered to versus where we exited, you can see a clear pattern with picking up the local bottom, right there, entering our positions, trading all the way back up to the local top, closing profit, right? So as you can see there, that's a 10% capture, right, from bottom to top. So the algorithm didn't only pick up the local bottoms, it had the ability to sell. And then as we can see, we've entered another new position now. If you look at that entry, very powerful stuff. The market's trending back up now. And if we go back up to the top there quickly, Costa, we can see a similar pattern, right? Closing, local top, entering, exiting. So as you can see, the execution engine behind what we've developed it's very, very powerful, and it gives you ability to capture the right kind of entries you need to, especially in markets such as Bitcoin, which have volatility behind it. So that's an overview of a high level of what the algorithm's actually doing. Did you want to add anything to that, Costa?
Yeah, I wanted to add, just to sort of tie it in with what Marcus is saying, and you know, the market has to go down in order to go up, and this is why the strategy and the system that we built really is a perfect way to capture that you know, those ideas. Is that if you have an algorithm set up and it's automated, it needs to be able to capture downside and then be able to maximize the profits when it goes up. And you can see when the market's trending upwards, it's very easy to make money. You know, you make a couple of orders, you take profit. The difficulty is when the market does the opposite of what you expect. And our system has been developed very, very smartly, that it really is, it doesn't really matter which direction the trend is going, but we're going to be able to capture the volatility and profit from it no matter what. And what else is unique is that we're not actually flipping between a long and a short position, that this strategy is long only, which does remove a lot of, the short risk when you're trying to cover the full power law band of the price action, which is what we do on these main two setups. So another thing I wanted to bring up is when we onboard a lot of our clients, because I do know a lot of potential clients watch these lives, we have two setups, and maybe Sebastian can dive into that. And then I did mention shorting, but I also want Marcus to discuss what he does in the trading desk, which does take this to another level, because we get a lot of people set up on the two settings that we have. We've got more of a high frequency one. This is our standard one. This is a more high frequency setting. And then also some of the, let's call it research that Marcus is doing in the trading desk. So our algorithm, Sebastian, you can just mention how it's kind of like a Swiss Army knife, right?
Yeah, well, that's right. So I'll touch a little bit on the two out-of-the-box settings that we've developed through our own backtesting environment and live forward testing, and then I'll let Marcus take over and discuss a little bit about how he uses the algorithm to do a lot of different operations at a high level. So, you know, for anyone that's watching this video, we're offering out-of-the-box settings where you can plug and play. Now, I'm not saying the setup is as simple as a few clicks of the button, but once you get our settings going, we'll put you in a position where, for the most part, you do not need to be in front of your computer to have the algorithm executing for you. It's going to do it 24/7, and it's going to be focused on risk management, right? And this is really, really important. So the key about the two settings that we set up is that, of course, the power law bottom is always respected and in mind. Now, what does this mean? Well, for the primary setup that we use, it means we can cover huge gaps in Bitcoin's price and also be able to protect the capital that's in the account all the way down to the power law bottom. So as we know, even though Bitcoin's volatility is actually dwindling over time, it's slowly getting less and less. This doesn't mean it doesn't have the ability to have 30 to 50% corrections, right? Which it does. As we saw recently, we're in a bull run, it had a big move down. So first of all, having enough coverage on Bitcoin's price is very, very important, making sure the algorithms can handle huge selling pressure. But we take it a step further than that. We don't just cover and anticipate for the worst case scenario, we anticipate for catastrophe. But the beautiful thing about this is our algorithm will actually dollar cost average straight into the power law bottom, which is typically, as you just saw on Giovanni's chart at the start of the show, a level where you want to be buying Bitcoin, right? That's the most incredible buying opportunity that's probably out there, is when we get to these levels. So it's about risk management and coverage, but also, more than anything else, having something that's going to accrue at the power law levels, which is going to put you in a position where you can get significant growth. The other setting, just quickly out of the box, is something that also respects the power law bottom, but also does have a little bit of a smaller coverage so that it can trade more frequently in and out, right? So we use these in tandem with each other. Now, why do we do this? Well, as Marcus has said many times, the market is fractal, right? And the market moves in segments. So the beautiful thing about this is we run one algorithm that essentially trades to capture large moves in Bitcoin's price action. And then we run another algorithm that basically captures the smaller day-to-day movements. And when you put these in tandem with each other, all of a sudden you've got a system that has the ability to trade all the price action that's in front of you, which is a very, very powerful thing. And respecting the power law bottom, right? So this is really where it all comes together, and we get an efficient system that can handle the vast majority of price action on Bitcoin. Now, what Marcus is doing in the trading desk, I'll let him take over now and explain that. But for anyone that wants to know more about these out-of-the-box settings, I want to make it clear that this is what we recommend, but at the end of the day, this is a Swiss Army knife. And when Marcus talks about what he does, you'll really see that you can do anything with our algorithm, right? You really can. And Marcus, I'll let you take over.
Well said, Sebastian. Well said. You covered a lot of the internal mechanisms, aspects of the algorithm, but I want to highlight one topic, and that's the future of where all of these marketplaces are going, especially crypto and the legacy markets like equities and all that, bonds. In the future, it's going to be almost impossible to do any type of manual trading. The 99% of all trading volume is computerized trading, algorithms, smart bots, high frequency systems, and it is basically a warfare of thousands and tens of thousands of automated systems. And the only way you're going to be able to operate any type of investing or trading activities is you're going to need to have your own algorithms working for you. And that's the beauty of it. So what we've built here with the Minotaur team, Sebastian, Costa, myself, we built a world-class professional grade algorithm that is the absolute leader in cryptocurrency trading, Bitcoin especially, for retail traders and small investors. So it is a professional grade 5-star algorithm that can do, just as you were saying, Sebastian, anything that you can basically want to replicate. And what we do in the trading desk is we unthrottle the algorithm to unlock its full potential. Uh, the type of trading that we do is a more of an augmented trading system where you and the algorithm are in a partnership, a symbiosis where the algorithm is the trader and you are the operator, you are the manager. So, and then if you understand that business relationship, who does what, it's very, very powerful, and you can scale it to the moon where you could have an orchestra of algorithms, if you will. It's basically, there's no limit to what you can do with them, and that's what we're doing in the trading desk. Very exciting, and you're welcome to join us.
Okay, and we are going to have an event on that is associated with the conference in Las Vegas.
Yeah.
So in fact, it's going to be the last day of the conference, and Costa can tell us about it.
Yeah, this is really exciting, this event. Obviously, we're going to be flying there. We're going to have a stall. We're one of the exhibitors and sponsors of the BTC conference. We were in Nashville last year. We'll be in Vegas. It's looking like nearly 10 days or something like that, which is crazy. Yeah, so we'll be in the exhibitor section, so you can come and visit us at the booth. And we are hosting our own private event with Giovanni. Because we want to give him the time and the platform to be able to share his ideas at the conference in a long form lecture style setting. And we're also going to be, so because of that, it's invitation only, but of course, come see us at our stall and have a chat with us. And we're happy to let you come along, especially if you've been watching the show. But we do have to just be wary of the numbers. That's why we're going to be giving out these passes like this. And it's going to be good. It's going to be a bit of a cocktail hour from 4 o'clock. We're going to have some drinks and some food and some nibblies. And then Giovanni and I will take the stage, and Marcus and Sebastian will join us as well. We're going to put together a really cool presentation and have a conversation and a Q&A. And of course, be able to meet you all in person. I know Giovanni is excited to meet a lot of people from his Discord community, from the X community, and also clients. We're very excited to meet clients and future clients as well. So yeah, we put together this event, and we encourage everyone to reach out, and they can DM Giovanni if they want to get added to the list as well.
Yeah, please DM me if you really want to come. We have a already kind of a full list, but we can make space for a few more people. So if you're really motivated, DM me and come to see us at our booth at the conference. I will be with the Minotaur people also at the booth on a regular basis. I will have some power law charts if you want to discuss or ask questions, because the conference actually, to be honest, first they told me I was going to be in a panel, and then for some reason they say we are not covering the power law. That I think it's mostly political, because a lot of the people in the community in that conference are FOMO based, and that is one of the things that I don't want to be polemical, but it's one of the things that distinguish us. In fact, I like about the Minotaur system that we are realistic, right? We are focused on. We are not making crazy promises like we are going to 10 pair your wallet, your stash in 1 year. We are not making any crazy claim like that. It's all based on realistic understanding of Bitcoin, of the power law, and using the volatility that is there, but with realistic goals. Ambitious but realistic. That is what it's all about. So
Right.
we are having our own event around the conference, and I think I like this format better anyway, because in a panel you get to talk for a couple of minutes, but here we will have more connections with the people that really are interested. But it's really an elite, right? Steven says, my partner in the physics of Bitcoin show, he says, oh, probably 1% of the people on Earth understand Bitcoin, 1% of that understand the power law, and 1% they understand, the bimodal nature of Bitcoin. That we have this bubble and we have a core power law. So you guys are the elite of elite, So and I think actually the people that want to use some of these tools, like the Minotaur systems, is an elite of elite. So really a restricted group that deserves, whatever great things are going to happen when you focus on realistic objectives, ambitious but realistic objectives.
Yeah, I think to use a Marcus metaphor, we can say that Giovanni gives us a racetrack, and we can give you a racing car to put on it.
Definitely. Definitely.
Okay, I'm looking at the questions. A few nice comments, but Dario is watching us. Dario is actually one of our members.
What's up,
that is
Dario?
testing the
Dario.
code.
Hey.
Hi, Dario.
We're going to do a show with him actually next week. But anyway, I think the only question that seems interesting is this. Any reason why Bybit versus the Binance data when you do your liquidity?
That's a good question. We run our algorithms on Bybit. Binance is probably the highest volume exchange, and then Bybit is probably going to be a close second. But what tends to happen is when you look at the leaders, then they're going to all mirror the same data. It's very, very close. So if you just look at one of those two, you're going to have a good picture. It's one and the same. So good point to catch that. Yep.
Most exchanges will follow suit, Marcus, right? From Binance anyway. I mean, you're looking at,
they're
very similar prices.
Yeah, very basic, very similar. And the reason we choose Bybit is just our preferred exchange that we use.
Yeah, what I like about Bybit from a user experience, I like how they handle, for example, margins. I think it's a better setup. I like the interface. There are many reasons to like Bybit, but exchanges are exchanges, so they should be very similar, the major ones.
Yeah, we've actually met them in person. We've met them in person as well. Some of the team. We've actually met. Sebastian can talk. He's actually met with the developer of the Unified Trading account. We had lunch with them in Melbourne. So, Bybit is willing to come and have lunch with us, which is fantastic. Maybe you can talk about that, Seb.
Yeah, well, there's a man named Danny Shan who actually develops all the algorithms for Bybit. Now, I'm not just talking about algorithms for price systems. I'm talking about understanding algorithms for liquidity, how they do their calculations, everything. And, we sat down with him for lunch and really picked his brain about everything, right? And he leads a gigantic team of developers, but, in terms of exchanges that offer tools that can assist you with this style of trading, they're probably the leaders in the pack, to be honest with you guys. And some of the things that their developers are doing and that their creators of algorithms are doing, I mean, even for me, someone who's had a lot of experience with these things, some of the stuff was going over my head. So it is very high level. And, it is one of the primary exchanges you want to be trading on. Costa can talk on this also, but if you want to do research around unified trading accounts and the tools that they offer, it's really incredible stuff. I mean, it's amazing how far we have come from, using a simplistic banking system to the kind of tools that, Bybit and Binance offers us now, right? It's really remarkable. And in a lot of ways, it's giving you tools that, this is another advantage about being in the Bitcoin market is you have access to tools that most people don't even know exist, right? And also tools that large banks and institutions have access to that they're using themselves. So, the fact that a retail trader can come in and access these kind of tools is pretty remarkable.
Absolutely.
Right. Absolutely.
Very good. Okay, guys. Unless there are any immediate questions or comment, you guys, do you want to say any concluding remarks? Anybody?
No, just again, I'd like to see everyone at the event if they're able to come and see us. We're all going to be there.
Yep.
For sure.
Yes, and again, if you don't have already an invitation, we will have a booth, have a conference right in the vendors area. So look for us. You can ask all kind of questions, interact with us, learn more about the trading system. I will be there. I will have my computer. I will have a way of talking and discussing about the power law if you have any questions. But also DM me for an invite to the event, and I will be available to invite you. Okay, guys. Oh, so we do have a question, final question.
I can answer this one, Giovanni.
Yes.
I'll answer this one. So in regards to the exact indicators we use, that is proprietary, unfortunately, to what we've developed. But once again, please feel free to book a call with our team and we will go in depth on what we do. Now, to answer your question around the lower time frames, specifically the 5-minute, definitely in the trading desk that Marcus runs, we do explore using a multitude of different time frames and a multitude of different systems, right? So to make it clear, our system can efficiently run on most timeframes, but there are advantages to running it on higher timeframes, of course, like you would see in traditional trading models, and advantages to running it on lower timeframes. So, if that's something you're interested in, please book a call with our team. We'll go into deep details about everything with you.
Yeah. One of the things we suggest, in fact, for example, I do, is to have more than one bot, right? These algorithms are flexible enough that you can set them up on different time scales with different parameters. And so you can open different sub accounts and then you can launch these bots, and they kind of are complementary. They do different things in slightly different ways. And then you average their behavior, right? So it's one of the things that you can do. Anyway, guys, I think we had a very nice show. We will be back on Thursday next week. I think we have one more meeting before the conference, and I don't know if we are going to do anything live at the conference, but if we do, we will let you know. But we at least have one more meeting before. If otherwise, we will skip a meeting during the conference because we will be busy with that. Okay, guys. See you soon. Bye, everybody.
All right, see you guys.
Thanks, everyone, for your time.